I'm a business owner. I should be able to handle all this. I should control all this. Like many of us are that are entrepreneurs and business owners. We like control to a certain
Right.
extent, right? So that prevents people from even reaching out and having that conversation.
Right.
But you alluded to another point is like, once folks have that conversation and you get that system in place, and now you can look at them weekly, biweekly, monthly, your financial statements. Welcome to the KB article, where we are focused on providing value and optimizing the growth and financial well-being of those we serve, with Kyle Kinsler, my business partner.
Hello.
Hey, Kyle.
Hey there. How you doing?
Good. Say we're going to do kind of a unscripted, not really planned session today or video. We had a cancellation, but we decided to keep the time locked in and jump on and talk about a few things, and one being intentionality behind what we do, and then segue that into more intentionality about planning for your taxes, your business, investments, those sorts of things. So, for me, intentionality is huge, and I've been reflecting a little bit on intentionality lately, Kyle.
Mm-hmm.
Today's my 47th birthday.
I was going to say happy birthday before you got into that.
Thanks,
so happy birthday, Chad.
Appreciate it. But anytime your birthday comes around, especially when they get higher in numbers, you reflect back on the past. And I know for me, when I got out of college, even before I went to college, I wasn't very intentional about what I wanted to do. I screwed up. I wasted a couple years. Finally decided, got intentional about what I was going to do. It was to get a degree. I did it in accounting. So I pursued that and my grades went up, my performance went up. I ended up graduating, that sort of thing. Well, I got a job and I just went through the motions. I had no intent of where I wanted to be 15 years down the road,
right?
20 years. So take that when I turned 30, I jumped into a business that you were in at the time, buying into a tax franchise after working at a CPA firm for years. I didn't know anything about running a business or doing anything. It wasn't intentional, right? It was just kind of a decision I made. And just up until recently, in the last 6-7 years, I've really been intentional about designing my life, my personal life, my business life, about what I want. So intentionality for me is huge. And if we can impact anybody by having that conversation today, is to be intentional.
Well, how do you be intentional? Like when you have, let's say you have a small business, or you're you're a high income earner or whatever it may be. Well, that would start with, you kind of got to know where you're at, right? So, and without knowing that, it's hard to do things. And I know there's sometimes at the end of the year, there might be you have a huge tax liability, and so what happened here? So you're not paying into your quarterlies, probably like you should. And if you have an extremely good year, gosh, I probably better know or have some strategies out there in order to take care of those things. And then younger on in the in my career, I wasn't real good at that, and it just and there was, of course, there were consequences for that. So and that's kind of, and I think it's been really good. And one thing that I didn't know anything about taxes when I left the insurance industry or whatever. I just knew that it's a recession proof industry or whatever it is. And I taught myself, actually, I taught taxes, and I knew nothing about it. So people ask, how did I do that? And basically it started like, okay, if I had like 6 or 8 people that I was training for tax class, I'd have to train myself up the night before and study really hard or whatever in order to have that. So I was kind of a leg ahead or whatever. But I tell you, it was just such a great wealth of understanding of, like, if anybody is an income earner or is going into business on their own, you got to have a good grasp on what taxes are. And if you don't know what is out there, man, it is a huge eye opener. So, I would encourage anybody that doesn't have a tax professional, and if you have a business or you're an income wealth generator, rather than having just maybe having a CPA wrapping up and doing your taxes at the end of the year. We need more than that. I remember one year I had my CPA had taken care of my taxes, and at the end of when it was all said and done, I had over a $10,000 refund coming to me. Well, my thing is like, why did that CPA? Because where was the planning that my CPA was giving me in order to make the right decisions?
Yeah.
Just having, I took my eye off the ball of where I should be, and I didn't need, my nose wasn't into my books, and I didn't do my planning. So that was just on myself as much as anymore.
Well, that's a solid point. I mean, with the intentionality, I'll be honest, I've accountant, CPA, everybody would think that I've always been a very proactive planner. That wasn't always the case. When you're starting your business, whether you're a plumber, an electrician, or whatever, it requires you to be in the weeds a lot, and you're juggling a lot of balls. You don't necessarily have the team to do everything. So even though I know what I know and what I should be doing, doesn't mean that it gets done, because you're always in the business, so to speak. So that happens to so many business owners that we see. I'm reading a book right now. It's called Buy Back Your Time. And it's about, they mention one of the first hires you should make in your business is an executive assistant to get you out of the weeds of a lot of the stuff that you deal with. So that's something that I'm analyzing right now and being more intentional about. But, if you're in the business and you're in the weeds, you don't have time to think proactively. A lot of times you're just trying to get those invoices out, do those sorts of things. So that's where you need to have somebody that can keep you on point. And it doesn't have to be expensive, and there's a lot of, because I've been hit with that, coming to the end of the year. Oh crap, I owe that much. How did that happen? Well,
right.
I
mean, we see it all the time within the tax offices, and especially now that we're into the season where they filed their extensions. Well, who files their extensions? It's likely the people that they owe taxes. But I tell you, the people, it seems like so many of them are so surprised. And I guess what we try to do, and you always try to give people a nugget, if you're not, say if we're not taking care of your books or guiding you that way, rather than just having your CPA or your tax person just wrapping up everything. But basically that's what you're doing. You're just kind of wrapping up the whole year, and then this is what gets kicked out. But if your bookkeeper and your CPA isn't giving you that guidance for the next year, shame on us for not doing the appropriate planning. But so we try to provide that nugget what we can. I mean, it's up to the individuals if they, if you can help them do that, because there are so many tax strategies that are out there. But the U.S. tax code is the most difficult tax code that there is in the world. Most people don't understand it whatsoever. Australia's got they've got a tax code, and Canada as well. They say they're kind of but they're not nearly as complex as what it is that the U.S. tax code is. But I always maintain there's a difference between taking advantage of the tax code and taking advantage of the tax code. That's out there. But in order to do that, you got to have a decent set of books, and you got to have an understanding of where you're at, right? So especially when you're starting out a new business, you're going to have high years and you're going to have low years. And how do you plan that?
Well, I think that the first step is just like with anything, is taking that first step of action. And it's actually having that plan. So if you're going to do tax planning, you have to have a plan to do it. Not necessarily the strategies and the execution, everything that you need to do to get the result you want, but you have to have it's got to be part of your business plan to plan on tax planning. And it's just a simple conversation. It doesn't have to be hard. Like you mentioned earlier, analyzing your income, the ebbs and flows, and making quarterly tax payments so you're not surprised at the end of the year, potentially. Right. That sort of thing. But it's really sitting down with somebody and doing that. But, what's the saying? Somebody will trip over $1,000 to get $5 or something like that, or $100 bill to get a $5 bill. Yeah.
Yeah.
And that's one of the things with I'll do it later. I'll do it later. There's an endpoint. It's April 15th, right? I'll get to it. I'll get to it. I'll get to it. Well, those decisions need to be made and executed on prior to 12/31 most years,
Right.
to get benefits. So it really goes back to that intentionality and purpose. And that's what we're trying.
Well, I think most people know, like you say, if you're a business owner, you realize and you understand there are huge, not just the tax planning, but if you're doing like we meet, at least on a monthly basis, and we roll up our books and we can look at the line items and kind of see where we're at. And you say, why are expenses so high on this? And what's going on over here type of thing. And man, why are we spending so much on IS resources type of thing? And we're contracting that out. And can't we? I mean, we could almost hire somebody to do that, and then we have another employee. I mean, we talk about those things, which is great in order to get us to where we are. But I think, like I said, like if you are a contractor, let's say you are a plumber and you have a business, maybe you have a few employees, and gosh, I got money left over at the end of the year. So what I'm worried about, how much do you think that is, Chad? The people, they just don't. They know they should do it, but they just don't because I'm kind of fearful of what I might find. And it's just
I think that's part of the obstacle of getting people to take action. And it's just like anything, that fear of perception, right? That fear that somebody's going to perceive you. You're a business owner, right? You own a business. They see your books and they're garbage, or they're kind of all over the place, or you don't even have a set of books, right? So that it's kind of that ego get in the way of saying, I'm a business owner. I should be able to handle all this. I should control all this. Like many of us are that are entrepreneurs and business owners. We like control to a certain extent, right? So that prevents people from even reaching out and having that conversation.
Right.
But you alluded to another point is like, once folks have that conversation and you get that system in place, and now you can look at them weekly, biweekly, monthly, your financial statements, it does so much more. It's not about tax planning, but you've got your books in order, but you're looking at it and you're seeing where there's lost cash flow.
Right.
Case in point, we kind of overlooked some things in one couple years ago, I think, and you brought up the example, the IT. That was us. That wasn't anybody else that we were working with. That was us. We overlooked it because it was coded incorrectly or whatever, and we kind of took our eye off the ball for a period of a few months during some transitions, starting some other businesses, that sort of thing. And when we got to looking at them, we're like, why are we spending so much on outsourced IT services? Well, a lot of it was just simply, it was easy to call and get the answer, and they were happy to charge it.
Right. They're happy to charge us
$175, $180 an hour, whatever it was. So since then, we've cut that in half, and
we're not even.
Maybe even more than half now. I'd have to look back at the actual numbers, but that's, $12,000 to $15,000, if I recall, in savings that we, just by looking at that number, making decisions. So if you've got a good set of books and you have a plan and you're intentionally looking at them on a regular basis, going through the general ledger, making sure things are coded correctly, you're going to identify that lost cash flow that you can find and put back in your business. But also you're going to have the opportunity to say, okay, this is where I'm at right now. It's June. This is what we kind of foresee. It's not going to slow down.
Right.
What am I looking at?
Right.
In terms of tax.
Taking it a step further than that. And I think also people, they might not, even if they had a set of books, they're looking at the books, they might not know where they should be, or when they look at the books, they don't quite understand what it is. So we have particular in our business here, we kind of identify that our rent should be proportionally this much within our business. Our payroll should be this much within our business. Right. Our marketing should be this much. And, even as truck drivers, and I mean, there's studies and all that stuff that gets done, and you put it on a pie chart. It's like, if you're in this kind of business, this is where this is kind of where you want to be spending about this much money on these types of expenses. And that's something that we can help people out with as well, kind of help them through that. and maybe humbling yourself and saying, hey, I don't quite understand that. Not everybody does. And it's
Right.
okay not to, because I mean, if you're in the weeds and you got a landscaping business, it's hard to go from having your hat to where you're out mowing lawns and you're fixing gutters and sprinkler systems, and then to turn on a different hat, and then to look into my books and then do planning. I think that's where you have a tax planner and a bookkeeper can come alongside you and help you make those strategic decisions.
Yeah, that's a good point. Yeah, so a good set of books allows you to do certain things. You can find that lost cash flow by reviewing it on a regular basis. You can do some more planning, uh, but it kind of goes back to our intentionality and vision, and where you want to be in X years. So if you want to be one of the best in your industry, at least in your local community, if not nationally, um, don't you need to know what your competitors in that same industry, in that same market are doing? So benchmarking, you said there's databases and information out there that compile data on industries, right? So you can benchmark where you're at. You can see, okay, what percentage of my payroll for operations is of revenue, or
Right.
different ratios and analytics that you can look at to say, well, I'm not where these guys are or my industry is, and I want to be number one. How do I clean that up? So now you get more purpose driven into diving into the actual thing. But again, you have to get your ego out of the way and say, I don't know what I don't know.
Right. Right.
And maybe align yourself with a firm to do some consulting or books or
Well,
tax, whatever it is. That's something we can help with, or even having a business coach that kind of walks you that line. And we're actually, I just sent an email yesterday to a gentleman who has built a software that will allow businesses to be able to do that in a more efficient, effective way of
right.
benchmarking and ratios and painting that picture of, okay, this is where you're at. This is what the industry is telling you should be. Here's your ratios. What are some things and bullet points you can do to fix that?
Right.
And that goes well beyond the books,
Right. Well,
bookkeeping.
I think just this year within our own business, I mean, you got that. The tax planning is one thing, and we can do that in the back end. But if you have a business and you might be $250,000 a year, $1 million, or a couple $1 million a year business. And, I think what we've been really honing in, just even on our own side, is where our ratios are at and saying, how can we fix our rents? And I mean, we've come, it's taken we've made some huge decisions when it's come to that to help out the particular cash flow. Also, payroll has been making sure that we get that tied up, so that you're not just paying unnecessary payroll. You making sure that individuals are being productive as they can, for each and every day that they're there. But there's other ways. So rather than just, hey, I got to get to the next job, going to my next job in order to make more money so I can grow my company so I can pay more taxes. Yeah, that's part of it. But I think that's probably where most people look at things when they're operating their business, when it's so much more, when maybe it's just a little bit of a tweak here, a little bit of a tweak there. And then also things look really good when you go to the bank and you need to ask for monies and they're going to say yay or nay. Does this person know how to operate a business? What does their bottom line look like? And with some of the adjustments, I mean, we can certainly help people make those adjustments within their organization, at least provide that advice. I mean, that's what we're here for. But it's nice to go to a bank when you have your sets of books that are in order. And so, I mean, that's for sure.
Especially in this market, where lending is not as easy as it was 10 years ago, or maybe 15 years ago now. You could walk in and get money and hardly any questions asked. Now it's you're put through the ringer. So having good organized set of books, one, establishes credibility right out of the gate.
Right.
You're delivering a ready product for them to review. That gives you a leg up So many businesses don't, unfortunately. And then, like you said, the tax return showing no income because you're writing off everything under the sun. That's not the best way to do it either. One, from a lending standpoint, two, the IRS is probably going to come talk to you at some point if you
Right.
continue to do that. But
Right.
talking about those, I mean, you know, that's the importance and of a tax plan, just overall business planning, I think, and that's something that we can help with. And but there's several others out there that can help as well. And we work with a lot of different partners to help in different areas, you know, that we're not super strong in. But before we, you know, jump off, I don't know how long we've been going here, but it's been a great conversation. You know, some of the business deductions that some businesses are missing out on. I mean, what are some tax strategies that businesses or business owners might
Mhm.
be not taking advantage of that they should? Do you have any thoughts, ideas on that kind of?
Well, I think some strategies, of course, if you are a business owner, being able to identify, what you can depreciate, as far as your cash flowing, um, and if something that maybe you want to expense something all out in 1 year, or a period of time.
Yeah,
Rental properties is also, of course, it's a depreciable asset. Health insurance, for small business owners, that is so critical, because health insurance, I mean, look at, we're used to paying exorbitant amount, especially as small business owners, for our health insurance. But I'm really have been big on, because I mean, did have a strong background in the health insurance industry, but that HSA is a real winner. And I don't think it gets enough attention, because that's that high deductible plans where people can, it'll lower your premiums, but also you can put up to, what's it, 8,700. Well, myself, because I just turned 55 this year, but
yeah,
$8,750 into your health savings account, so that way, and basically without having to itemize that, you can reduce your tax liability, because it comes off as a credit or expense, on your tax return, without having
yeah,
to do that. And if you don't use it, it's not a use it or lose it type of thing, but you can. So let's say if you have 4 or 5 years that, you have very nominal health related expenses, that can accrue into an account, basically any account that you would, like if you had a regular 401k. The beauty of it is, whatever that is at age 59 and a half, and let's say you have been contributing to this thing for 10 or 15 years, those monies then basically get treated as like a retirement account.
yeah,
So that's the beauty of it. Most people don't know it, they don't understand it.
yeah.
Shout to myself if you want to know more about it. It's a great
No,
vehicle.
It's a great vehicle. It's actually something, you know, I'm going to have to look at going out and getting my own
Mhm.
policy now,
Right.
or within the business or whatever. And how do we structure that? Because my wife was pulling in the insurance, and now she doesn't. So we've got a few months left to make a decision on that. So I mean, and that's a huge consideration, because one, you're paying a little bit more than you would if you're paying it out of, you know,
Right.
from an
What?
employer standpoint. But yeah, definitely tax savings there help. Some others, you know, we work with some business owners that are now kind of sold their business, retired, and they own their house. They
Mhm.
have no mortgage interest. And, you know, back in 2017, the standard deduction increased. One of the things that a lot of people don't realize, and we see quite a bit, they're not itemizing deductions anymore, but they're still
Right.
donating $15,000 to $20,000 to the church. Well, once you reach a certain age, you have to start withdrawing required minimum distribution from your retirement account, right?
Right.
And rather than getting that distributed, and that's taxable, so it comes directly to you, then of that, you make your contributions out of that, just as you would with other income. But
Right.
one just very simple strategy is saying, I want to give $30,000 this year to the church. You can do that distribution directly from your required minimum distribution, or 501c3, or nonprofits, and you're not taxed on that, right? That distribution is a non-taxable distribution.
Right. Without having to go through your itemized deduction. I mean, it's more of a direct route having to do
right.
that. So,
Yeah, and then the other thing is we see a lot of high income earners, selling stock, getting capital gains. Another avenue is you can contribute stock as well.
right.
Appreciated stock or property, and then you're passing that tax rate, and there's no capital gain. So if you're going to give anyway, it might be best to give that stock away versus sell it and then have the cash flow to give. So those are just some other options to look at.
I think we can kind of get into some more. I mean, I want to talk a little bit more. Maybe next time we can talk about some of the small businesses and how their impact there. But I think as a small business, I know you have you have good years, you have bad years, or not bad years, or whatever. I mean, we do have bad years, but that depends. If you're going to have a great income earning year, you might want to contribute more to your 401k than previously. But then maybe you want to grow your business this next year or whatever, but you got to make big acquisitions, and I have to buy a bunch of equipment or whatever it is. So my bottom line isn't going to look so good. You take those opportunities. I'm not putting it into maybe that so much into that 401k, but then I need to maybe look at putting that money into a Roth because it's not so impactful now. And then I can take that money out in retirement, which is tax free. But you can't hardly do that in some years when you're making in excess of the amount that you're allowed to in order to contribute into those Roth accounts.
No, that's an awesome idea. And just to kind of add a little bit more to that is, you might have a $300,000 net profit year, right? EBITDA, right? Before depreciation and all that other stuff. But you add in, like you said, buying equipment, that 300,000 that flows through to your personal income now becomes 50,000, right? Because you had a couple $100,000 worth of write-offs, non-cash write-offs for, say, depreciable items. So now your taxable income is say $50,000 and not $300,000. That's the time where you might want to look and say, right now, because my income is so low, I'm going to reclassify or my retirement, my IRA, to a Roth.
Right.
So you're going to be taxed on that conversion.
50,000. Well,
you're going to be taxed on that conversion, whatever that money is, but your other income is lower, so you're not in that top tax bracket. You're right. You're middle of the road. So now you just save $20,000 in that transition, because now at the end of the day, or however much it is, 20,000 might not be a good example without accurate numbers, but now that Roth, when you take it out 20 years from now, is tax free.
Right.
So just things to consider. There's a lot of different things. Like you said, we can drill down a little bit deeper in future calls. I think this kind of it was a good conversation. We touched on a lot of topics. It was kind of impromptu. We had something planned that didn't work out, so we just we just went at it. But I think it added a lot of value, and I think there's a lot of nuggets that people can take away, or at least conceptually. Maybe not the full load of information they need to make decisions, but at least walk away with some, items to think about. Or
I think that's where we want to go, as an organization with Kinsler Brown, that we don't want to just be that. We don't want to be a transaction and just prepare your taxes, or maybe not just, we don't want to just take care of your bookkeeping for you. The idea is that you can set in, if you want us to, we are more than happy. We would encourage that we can sit down with you and actually make some strategies for you and put your money to work for you.
Yeah.
And which is, gosh, now how many business owners have that type of control in their business? Not many, and that's where we're here to help businesses grow. And I think we've got a wonderful team. In fact, we've got tax strategies, and one thing about it is that we are basically help businesses grow, but we don't always sell insurance products direct, but we're here to help direct, and we have strategic partners out there that we can refer to, saying, so basically you have the best of both worlds, that you can help, we can help you, guide you on the front end, and they can do that other work on the back end, because there's not many planners out there that know the whole ball of wax.
Yeah.
And
no, 100%. I think, like you said, we can help. But if you're working with somebody right now, it's like a marriage. Sometimes people are more married to their CPA or their accountant, whatever. But you need to have these conversations with them. I would recommend you go and talk to your folks and make this part of your plan.
Right.
You're to be intentional about having a conversation about, can I do tax planning? How can I do things different? Because I want to be here in 10, 20, 30 years. So, yeah, with that being said, thanks for tuning in. Until next time, with
Yeah.
Kyle, we'll jump on. I appreciate the conversation, and we'll talk to you guys next time.
All right. Well, we'll see y'all later. Thanks for coming. See ya.